Are we live? Okay. All right. Good morning, everyone. It's 9:39 a.m. West African time. I think that's about 8:39 a.m. UTC. Beautiful, shining morning here. And depending on what time zone you're tuning in from, I want to wish you a good afternoon and good evening. I'm very much excited to welcome you to another promising edition of our Forex Morning Mastery as we delve into the second half of the week. We've started the week pretty well. Remember, we have been monitoring the usual three financial assets, which includes the US All Spot, the GBPUSD, and of course the XAUUSD. And interestingly, the US dollar hit an all time record high again at the 3,300 level this morning before we begin to see some bearish traction coming in, which we are going to be looking at to see whether or not the momentum will continue. Then on the US All Spot, we had a break-even situation currently. Okay, I think we had a little bit of a profit. We had a buy at the beginning of the week. Then we saw a sell trigger this morning. We are going to be deliberating on that too. If you are a fan of the US All Spot, stay tuned in as you do not want to miss out on that one. Then the GBPUSD has also done pretty well as at this morning when I was looking at um, my position. We currently running with about 100 pips in profit as the pound sterling continues to take advantage of the weakness of the US dollar. So we are going to be looking at all of this in detail this morning. We are going to be looking at the fundamentals, the economic events, and of course we are going to take into account the technical details on the chart, which will be giving us an insight into how market participants are behaving. Now, before we go into the details, first of all, I want to welcome newcomers in the house. For those of you who are joining us for the first time, you are highly welcome. My own name is Sheriff Daramola, and for the next 40-50 minutes thereabouts, depending on how long this session is going to take, I'm going to be your host as we delve into the financial market together. Now, we run this session three times in a week. That is Mondays, Wednesdays, and Fridays, where we all come together to have a deep insight into the market. So, mark out the calendar, mark out the timing so you don't miss out on our subsequent editions. So, once again, I really welcome you on board and encourage you to actively engage in the comment section. So, with that said, let's dive right into the business. And of course, the US dollar, which is an asset that is common across all the financial instrument we are monitoring, is currently down and it continues to show sign of weakness, mainly because of expected Fed rate cuts and trade worries. Now, we are going to be using this weakness to our advantage by trading assets that do better when the dollar is soft, like the GBP that we are talking about, and of course the gold commodity, which is the XAUUSD. And of course, we want to also ready ourselves to adapt if new changes happen. Now, the market is expecting more interest cuts because inflation is softer in the US, and this makes the US dollar much more weaker. Then the ongoing US China trade tension and shifting tariff policies are shaking confidence in the US economy, which adds to the dollar weakness. Then, of course, we also saw the cross market impact where a weaker dollar is lifting assets like gold and the British pound. Of course, we know that when the dollar falls, people move money from their dollar portfolio into other assets to protect their wealth. So how do we intend to approach the market for the rest of the week? And of course, we are going to be looking at assets. We're going to be looking at the GBP. We are going to be looking at the crude oil and, of course, the gold commodity, which are good examples that can help us to capitalize on a softer US dollar. Then it's important for us to keep an eye on data and Fed announcements. Hold on a second. I think I'm having some technical issues here. Give me a moment, please. Okay, I think I'm finding it difficult. I'm up to some technical issues. Give me a moment, please. Okay, so I think we are good, right? So So we're going to be keeping an eye on new data, and of course we also have some Fed announcements. If there are any surprise changes, we want to be ready to adjust our plan quickly depending on what the outcome is. And of course, we want to be paying attention to how the dollar is performing compared to other assets. If gold continues to rise or the pound keeps strengthening, that's a signal to consider taking some position. So we are going to be delving into all of this while we take into account the fundamentals. Now, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And of course, as you can see on the chart, we have some interesting situation unfolding, and it appears price is still within the range bound it started this week. And if you are with me on Monday, remember we did mark out a simple structure here where we saw how price was initially confined within the $61.60 level and the $60.59 area, giving us a range bound structure during the first 6, 7, 8 hours of the week. And remember, I mentioned that I had a buy position running, and then I was looking to add more at the breakout of the resistance line at the $61.60 level, which obviously got triggered. We saw price move about 51 pips thereabout before that massive bearish move took us out of all buy positions. And of course, you know how we do it in this community. As long as price moves significantly in our favor, we move all stop losses, secure the positions to protect ourselves from any sudden pullback. And if you had done that appropriately, you must have been taken out with a small size of profit or a worst case scenario break even. Then this morning, price action broke down the support line at the $60.59 level, and by the time I came here this morning, I saw price moved over. How many pips was that when I saw that? I think it was about 40 pips thereabout. I immediately moved stop loss to break even and got taken out of that sell position at break even. So for this week so far, we really have not captured any significant move, and from all ramifications here on the chart, it is quite clear that price is back within that range bound structure it started this week. And for me, I want to see this as a sign of indecisiveness in the market as market participants continue to digest the fundamentals before making any aggressive bet. Now, I also want to share some things with you on the higher time frame so we can be on the same page. Now, if you look at the higher time frame here, remember we talked about this beautiful descending trend line, as you can see here, and I did mention how we are beginning to notice a reversal setup in the form of what is looking like an inverse head and shoulder pattern, where the key level at the $62.50 level is serving as the neckline of that reversal pattern. And one of the things I said here on Monday is the fact that if we can see a breakout of the $62.50 level, this will be a beautiful confirmation that we are going to the upside. But till this moment, we are yet to see price even come close to that structure. But one thing I would like to share here is the fact that price is still trading above that descending trend line. So we saw a breakout happen on Monday, and since Monday we can see price has gone through a consolidation, and not only a consolidation here, but price doing a retest of this trend line. So as soon as price tests the trend line, what do we see? We see price moving to the upside. Now the question here is, will this be a platform that will incite the next wave of bullish momentum that might probably break out of the $62.50 level? Now, this is what we are going to be trying to decipher this morning. But before we go into that technical details, let's understand the fundamental factors that are influencing the sentiment in this market. Now, the oil prices during Tuesday, I think during the later part of Monday stroke the early hours of today, hasn't been doing very well. We saw a lot of pressure on oil prices. As you can see here, during the Asian session, price had continued to find lower highs since that Monday session. Look at this, and this resulted in this bearish trend line. And what could be the reason behind this strong bearish momentum that broke down that support line? Well, there are some new development in the market where we saw the International Energy Agency, that is the IEA, they reduced their 2025 global oil demand growth forecast to 730,000 barrels. I think they pegged it at over 1 million barrels per day for the forecasted demand for oil in 2025. But based on the escalating trade tensions and economic uncertainty, this may likely affect the growth demand for 2025. So they've pegged it now at 730,000. Now, this news here came in as a shock to the market, and as a result, we saw some selling pressure, which pushed price to break down that $60.59 level. Now, besides that, hold on a second, please. Hello, I'm so sorry about that. We had some technical issues here, but I'm very glad that things are sorted out at the moment. So, where were we? Okay, so we were talking about the IEA cuts, as IEA cuts the demand forecast for all demand growth for 2025, which could be one of the reasons that we saw the selling pressure we saw in the last 24, 36 hours. Then we also saw the American Petroleum Institute, that is the API, reported a surprise increase of 2.4 million barrels in US crude oil inventory for the previous week. And we know what that means to the market. When crude oil stockpile increases, it means that the demand in the market is very poor. So as a result, they were able to save some more oil in the stockpile. And this contrasting figure with the expected 1.68 million barrel indicates weaker demand in crude oil in the US economy. Then we talked about this last week that OPEC and its allies are planning to boost production cuts by 411,000 at the start of May, potentially excavating the global oil surplus and putting further downward pressure on prices. Now, to cap it off, the growth, the IEA revision, that is of oil growth due to increased operational cost from new tariffs and reduced drilling activities also contributes to market concerns. So for me, the path of least resistance for crude oil based on these fundamentals highlighted here is shows that the path of least resistance for crude oil still remains to the downside. However, looking at what happened this morning, seeing price action break back above the trend line, I'm beginning to notice that something may be happening behind the scenes that we are yet to get. And it could be as a result of markets reassessing the impact of President Trump's aims at temporary exemption from new tariffs, which could alleviate some economic pressure and support oil demand due to increased economic activity. Then we also saw China's crude oil imports increase by nearly 5% year over year in March. That report has actually was actually as a result of a surge in Iranian and Russian shipments, indicating robust demand from the world's largest oil importer. And this could shift the momentum from that bearish outlook that we are talking about earlier. And for me, that is further confirmed by the breakout of this beautiful descending trend line. So what this simply means is that this trend line here is going to be playing a significant role in guiding our trading decisions today. So how do we take advantage of this? Well, in as much as the market is looking bearish from a long-term perspective due to oversupply concerns and weaker demand indicators, we are not going to ignore the potential that sellers can also come in, but we're also going to be keeping eye on important structures around this trend line based on price action and market development to capitalize on trading opportunities. So what I'm going to be doing here, since price had already broken out of this trend line, though I already have a buy position triggered, which is currently running with about okay, it's in a loss of about 8 pips, I think 8 pips, which is still very insignificant at this juncture. But if you missed out on this one, let's see if the market will come back, retest the structure, like which is a theoretical expectations before that uptrend scenario continues. So at this point in time, I want to be maintaining a bullish bias, seeing this significant breakout of this descending trend line, showing us sign that there is likely a shift ongoing at this point in time. So I remain bullish. let's say from a short-term perspective, then I look to add more buy positions at the break of that resistance line at the $61.60 level. Then if price continues to climb, remember we have this key level at the $62.50 level, which also doubles as the neckline of that potential reversal pattern we identified on the 4 hours time frame. If a further breakout of that structure happens, it will further support the upward trajectory, confirming that buyers are getting stronger at this point. So I maintain a bullish bias on the US crude oil spot as long as price remains above that descending trend line. However, if the effect of the IEA cut demand forecast, unexpected US inventory buildup, OPEC plus increasing supply, and of course slowing US production growth becomes the order of the day and exerts selling pressure on crude oil prices, I will only consider selling the breakdown of that initial support line, which also lines up with that descending trend line. So if price can break down, retest the structure of that descending trend line, then that will welcome selling ideas. So that will be the only reason that will make me sell the market today. So this trend line here is going to be playing a significant role. So I encourage us all to mark this out accordingly on our chart, as we are going to be needing it as a reference point to guide our independent trading decisions today. So that is my simple view into the US crude oil market. Let's see how the market plays out today. And of course, if there's anything new that comes up along the line, I will definitely update us on my Telegram platform. So if you have any questions whatsoever as regards to my explanations, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of none, I guess we are all on the same page, right? Hope you've marked out the structures. Let's see how things will play out. And like I said in my analysis, this descending trend line is going to be playing a significant role in helping us navigating this market today. And it's also going to be giving us an insight into how the sentiment in the market is going. So if there is a shift from this bullish bias, a breakdown of this descending trend line will welcome selling ideas. So I want to wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. Stay tuned. So the next asset we are looking at this morning is the GBPUSD, and what a tremendously profitable week we have here on this particular asset, as we see the pound sterling continue to ride on the US dollar's weakness. And thanks to a prospect of US trade deal. We saw the vice president of the US express optimism about securing a trade agreement with the United Kingdom, which also was one of the major factors that attracted investors in investing in the pound sterling. And besides this, last week we talked about the very resilient US UK economy. We saw a rise in GDP, a good what's it called again? We saw consumer sentiment increases. We saw a good retail sales data from the United Kingdom, all of which is a very good signal for the pound sterling. Then to top it, at the beginning of this week, we were looking at the Bank of England. Majority of market participants see the expectations of interest rate cuts in the UK reduced compared to that of the United States, and this further attracted more investors to the pound sterling. Now look at what we saw at the beginning of the week. Remember, we saw this beautiful structure after marking out an ascending trend line. Then we saw price started the week. For the first, I think, 6-7 hours, market was consolidating between the 1.31040 level and the 1.30640 area, giving us an insight into the prevailing uncertainty at that point in time. And you know how we treat our range-bound structure in this community. Whenever we identify one, we exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And lo and behold, we saw the breakout of structure happen on Monday, as at the beginning of the week, giving us a beautiful signal that the momentum from last week is likely going to continue. Though I took that trade and I got out of that trade after moving my stop loss to around the 1.314. As you can see, this retracement move took me out of that position, but we got the another buy position triggered, had the break above of the 1.32100 level, and this of course is the one that is currently running at this point in time. So we can see right at the bottom of your screen, I have about 110 pips in profit at the moment, and I have moved my stop losses to 1.32485, and I think I want to adjust that immediately to, okay, it's still around that same area, 1.32 I want to do that. Okay, let me put it at 1.32597. Let's give enough breathing space for price action to move around. So I've moved my stop loss right now to 1.32597, and I do encourage you to do the same if you still have your buy positions running. I initially put my TP at the 1.329, I guess, but this morning when I saw the strength of the pound sterling right here on the chart, I had to extend it. What did I extend it to? I think I extended it to, okay, 1.33400 level. That's where I extended it to, just to maximize the potential of this bullish move. And for those of you who capitalized on this opportunity, well done and kudos to you. Now, going into today's trading session, what are the chances that buyers and sellers have in this market? Are we going to continue looking out for more buying opportunities, or are we going to be getting ready to sell, maybe as a result of profit-taking activities? However, it is important that we also take into account the recent fundamental factors in this market. Now, we saw a softer UK inflation figures yesterday. So let's go into the economic calendar to see what happened here on Tuesday. So we saw, this morning, it was this morning, sorry. So this morning, the consumer price index from the United Kingdom came in lower than what market had expected and even lower than the previous month data. As you can see, we had a 0.3%, and of course for the year over year we had a 2.6%, way below the previous month, which was at 2.8%. And what does this tell us? It tells us that the CPI has slowed down, and this also shows that it is at its lowest level since 2024. And this easing in CPI may reinforce expectations for a Bank of England rate cut in May. Now, this is where the dynamic may shift. Now, when inflation is dropping, it usually devalues the currency as the expectation of rate cut may come into play. Market may start increasingly pricing in a potential rate cut for next month, which could weigh on the pound sterling. So we are not going to ignore these possibilities, and this could result in profit-taking activities. Then we also saw a UK job vacancies decline for the 33rd consecutive quarter, falling by 26,000 to 781,000 between January and March 2025. And of course, this is indicating a slowing labor market. And if you ask me, this doesn't look very good, and investors may likely get skeptical about this development and beginning to consider taking some profit off the chart. And of course, if you look at this 1 hour chart, you will see that in the last 1, 2, 3, 4, 5, the market has been a little bit indecisive as we see price action confined within a range-bound structure, reflecting the uncertainty going on at this point. Then let me bust the bubble again. The rise in employers' national insurance contribution from 13.8% to 15% this month may pressure businesses, potentially leading to reduced hiring and investment, because they will have to pay more, of course, since the insurance contribution has increased. So they have to pay more, and as a result of this, they may want to lay off, and this could add to the UK job vacancies, which I said earlier declined by 26,000 to 781,000 in the last 3 months. So though the market is looking bullish at this point from a technical standpoint, and considering the fact that the dollar is weak, we are not going to ignore the possibilities that sellers can also come into play. So how are we going to be trading the GBP USD for the second half of the week? Now, given the anticipation of a Bank of England rate cut and a weakening labor market indicator, we are going to consider a cautious approach to the GBP at this point, especially against a stronger currency like the US dollar. So it is high time, if you have not done that yet, kindly move your stop losses, secure the current buy position, and let's see what will happen within this range-bound structure. So, and of course, we're also going to be staying alert for any Bank of England communications and US economic releases that could impact the GBP USD market dynamic. So today, Wednesday, April 16th, we've already seen the consumer price index coming in lower, which is not a very good figure. Then we saw the retail sales price index coming a little bit, even lower than the previous month as well, but higher than market had expected. Then later today is another high impactful event from the United States economic docket, and that is the retail sales data. So this event here is coming in 12:30 p.m. UTC. That's about 1:30 p.m. West African time. Now, the retail sales data gives us an insight into information about consumer spending in the United States. Now, if the data comes in higher, then there is a high chance that the US dollar may recover. Give a little bit of confidence in the US dollar as this shakiness around the GBP comes into play, and it could push price to the downside. Then we also have, what again do we have today again? I think, okay, we also have the Fed chairman speaking today by 5:30 p.m. UTC. This is another important event. That's about 6:30 p.m. West African time. So we want to see what the Fed chairman is going to say. What is his outlook as regards to the trade war and the intending inflationary, softer inflation figure in the United States, and what plans is the Federal Reserve having as regards to interest rate decisions. So this is one major event that majority market participants will be looking forward to, and it can change the dynamic of this market. So at this point in time, what I will be saying right now is just exercise patience and let's see how the market will react. So if we scale down into the 15 minutes time frame, this was what I was able to come up with. So I have a beautiful structure here on the 15 minutes time frame, which we are going to be using to navigate this market today. So we have an ascending trend line. Price is finding higher highs and higher lows as it tested the yearly high at the 1.329-ish area. So this is the highest point price action has been this year. Then we see price go through a consolidation. So I'm looking forward to adding more buy position if price breaks above the 1.32850, which has been a resistant line in the last 4 to 5 hours. So if price breaks above that structure, we continue the buying. But if it so happens that buyers continue to find it difficult to break out of that resistant line, resulting into the breakdown of this ascending trend line, then the momentum is shifting gradually. So it depends. If the US economic figures or the Fed chairman comes in a little bit hawkish today, we could see price drop, breaking down the 1.32500 area to inside a massive sell. So I'm looking to sell below the 1.325, but not jumping into that sell right away. Wait for a breakdown retest for confirmation's sake before jumping into that sell. Now, if price drops from the 1.325, please note that we have a bar stop at the, hold on a second, I think we have that on the 1 hour time frame. So we have a bar stop at the 1.32100 area just right here. So if price moves close into the structure, that's going to be about 40-50 pips movement of price action. Kindly move all stop losses to secure that sell position while we monitor price action around this area to decide whether we will continue the downtrend or get ready for an uptrend continuation. So what, depending on what happens here, will determine that. Breakdown retest will welcome selling ideas, but if buy pressure comes in, that is sellers finding it difficult to break through, it could incite an uptrend move. But we shall be looking at that when price gets into that structure. So in the meantime, the simple setup we are looking at here is on the 15 minutes time frame, and let's see how the market is going to play around this area as they anticipate the retail sales data coming up in about 5 hours from now. So this is my simple look at the GBPUSD, a beautiful setup. We have an ascending trend line. Price remains above the ascending trend line, suggesting more buying opportunities as we position ourselves above the 1.32850. So I will just place a buy stop order at that point right away. So I'm doing that right now. You will see it at the bottom of your screen, 1.32850. Right above it, I just placed a buy stop order, and let's see how far that momentum is going to go. So that is my simple view on the GBPUSD. I want to wish us all the best of luck on this one. If you have any questions, let me know in the comment section. I will take about 5-10 seconds as always. Let's see if there are any before we jump into the final assets on our watch list for this week. And don't forget to give the video a thumbs up if what we have said so far here has been of immense assistance in determining your personal trading decisions around this asset, kindly give the video a thumbs up. Your thumbs up are very, very important for me and for the community at large. It continues to inspire me to do more, and of course it also helps the YouTube algorithm to push our video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. All right. So, in the absence of no questions, I guess we are all on the same page, right? You've marked out the structures accordingly. Let's see how the market will play out around here, and I wish us all the best of luck. So, moving on to the final asset on our watch list for this week. So the final asset we are looking at this morning, my favorite of course, and that is the XAUUSD, popularly known as the gold spot. And what a week we have here. As you will see, the price of gold hit another all-time record high around the 3,318-ish before we saw that shaky consolidation happen in the last 1 hour or so. And thanks to the uncertainty in the global economy, which obviously continues to fuel the demand for gold commodity, but we do want to be respecting a potential tide in the shift, because anything could happen at this point in time. And what are the things that have been influencing the price of gold this week? We have safe haven demand, which has surged tremendously as a result of global tension spike, pushing gold to a new record high. Then we also have the capital one here, that is the weakness in the US dollar due to eroding confidence in the US economic policies and expectations of aggressive Fed rate cuts at this moment. In fact, as at this morning, while I was looking at my financial feeds, the sentiment in the market is now the larger part of the sentiment in the market is now pricing in a 100 basis point cut of interest rate this year, 2025, fueling a shift to non-yielding asset like gold. Then we also saw China's Q1 data, which also beats expectations, resulting in a lot of optimism around the gold market. And then we saw the intensifying US-China trade tensions, keeping the demand for gold very, very intact. Now, for me, the path of least resistance for gold still remains to the upside. This is why it's interesting for me. And the chances that even we are within uncharted territory, price action is evolving in such a way that it is giving us more confidence to continue to buy. However, the upcoming Fed chairman's speech today could reaffirm whether the Fed is still dovish or hawkish. So we definitely want to be looking forward to that one. And I think that is the reason why we are seeing a little bit of diciness around taking aggressive bet. If you look at this last hour candle, you see it closed in the form of a doji, which is a theoretically confirmation, which theoretically confirm that there is an indecision around this particular area. So there is the likelihood of market participant waiting for the Fed chairman's speech today before making any aggressive bet. So it's important we take this into account. And then this temporary tariff reprieves on electronics and possible auto levy exemption improve global risk sentiment slightly, and this could limit aggressive buying in the gold. So we need to be very, very careful around this point. And if we look at things from a technical standpoint, the overbought situation may lead to short-term pullback or profit-taking activities today. So how do we intend to trade the gold commodity? Well, we need to be very strategic around this area. If price shows exhaustion or bearish divergences on lower time frame, we want to consider scaling out of long position and setting short-term counter trade opportunities. Now, for those of us, okay, let's talk about the how we capitalized on this bullish momentum since the week began. Remember, we had this range bound structure at the beginning of the week, and I think we were selling the XAUUSD on Monday. Yes, we sold on Monday when price broke down the key level at the 3,220. I think we made about 200 pips thereabout on that single move before this whole consolidation started here on Tuesday. And yesterday I updated us with another structure on the 15 minutes time frame. I just hope I still have it here. So this was the structure. Okay, this was on Monday on the 15 minutes time frame. Then on Tuesday, yesterday, I shared with you another update on my Telegram and TradingView platform where we initially had a sell position as a result of this. We sold below the, let me extend this out a little bit so we can see. So we sold below the 3,222 level, and I do hope you got my update on this. As I said, everyone should move their stop losses to secure position after price moved over 80 pips. And I did mention in that narrative that we're beginning to notice buy pressure again around the structure. And with a buy stop order above the 3,232, we had another buy position triggered, resulting in a 700 pips move, as you can see here, hitting that all-time record high. And in the last 1 to 2 hours now, consolidation is gradually evolving on that area. So will this momentum continue, or are there any chance that sellers could come in maybe as a result of profit-taking activities? So how do we navigate this market today? What are we going to be looking at? Then mind you, the major catalyst for today is going to be the Powell speech, that is the Fed chairman speech, and if there are any new tariff announcement today. So it's likely we could hear some new tariff announcement. Any shift could spike volatility and offer re-entry setup. So let's look at the technical details we are going to be using to navigate this market. So this morning I was able to, I couldn't find something on the 15 minutes time frame really, so I scaled down into the 5 minutes time frame, and this was what I was able to come up with here. So we have a couple of ascending trend lines, and you know how we use our ascending trend lines in this community. As long as price remains above them, what do? We continue to look out for patterns and structures that support buying ideas. Now, with the way things are going right now, we've seen price come back into the trend line. Then we see this move, and one thing I'm noticing now is that the last 1, 2, 3, 4, 5, 6, 7, the last 30 minutes or so, price is yet to break out of the previous high, showing some weakness in buying pressure. So what I will do now is to mark out a key level for our next move. So we are looking at 3,314. So we have a key level right there at 3,314 level, right? So this is our resistance line at this point. Then we have a support line somewhere around right here at the 3,200 298. So we have a support line right here, and I will share with you why I'm having the support line here. So that's 3,298 level. So there we have it there. So what I will be doing right now is this. Okay, so the reason why I have my support line here is this. One, this level here was a selling niche during the early hours of the London session, as you can see. And you can see this was the same spot that's pushed price to another record high, though we saw price break down a little bit, but you can see the momentum above the structure is still maintained. So what I'm thinking here is that as long as price still remains above the support line, we will maintain a bullish bias, looking to add more buy positions at the break of the 3,314 dollar level. So that is that, right? Let me just put this right here. And then if it happens that this previous high cannot be breached or broken and sellers continues to get stronger at this point, we could see the emergence of profit-taking activities, which could lead to the breakdown of the support line here at the sorry about that. Okay, this 5 minutes, right? Okay, hold on a second. So we have it. So we can see price drop below this 3,298 to incite profit-taking activities ahead the Fed speech. So I'm looking to sell only if price breaks down the 3,298. So we have a beautiful range bound structure to work with today, and that is between the 3,314. So we are talking about $15-16 range bound structure, and you know how we use our range bound structure. If price remains within it, we exercise patience, wait for price to either break out or break down the structure to give us a trading signal. So that is my simple view on the XAUUSD, and I know that those of you who are day traders or scalpers, this is a suitable trading setup that you want to be banking on for today's trading session. So I encourage us all to mark out the structures accordingly on our 5 minutes time frame, as we are going to be using this to navigate this market today. So I wish you all the best of luck on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take another 5-10 seconds off before we round off on today's Forex Money Mastery. I see you, Jonah Aruna. Good morning to you. It's been a long time since I saw you. Trust you are doing very well. And how are you doing today? So I look forward to your questions, and let's take about 5-10 seconds to do that, and I will be right back. So guys, please click on that like button. Let's support the channel. Let's push this video to a wider audience of traders who may find this content beneficial to them. And for those of you who already clicked on the like button, thank you very much as you do so. So in the absence of no questions, I guess we have come to the end of today's Forex Money Mastery. I think we spent about an hour thereabouts. An interesting session, of course, where we were able to run through the 3 financial instruments on our watch list for this week, which includes the USOILSPOT, which we have done pretty well. I think the trade this morning it's already in profit actually. Hopefully it will continue to rise, and I did mention for those of you who are yet to capitalize on this, we marked out structures and level we are going to be using to navigate this today. Then we also looked at the GBPUSD, one of our profitable assets for this week, where we are already banking in on over 100 pips on that particular asset. Then on the XAUUSD, we're doing pretty well. And today we've been able to identify a 5 minutes time frame trading setup that will help us to navigate this market today. And for those of you who are coming in late, don't worry. You have the opportunity of watching this live session, watching the replay of this live session immediately this session ends. So stay tuned in on that one. So it has been a wonderful moment with you guys today. I do hope you've marked out the structures accordingly. Let's exercise patience and allow the structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess. So with this in mind, ensure you have a well-defined risk management strategy in place. And for those who joined us for the first time, I do hope you were able to gain one or two things from the session. If you did, why not join us in our next session on Friday, 8:30 a.m. UTC? That's 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare for the final trading day of the week, which also promises to going to be another exciting one. So it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.